Short exercise 3-15. We're going to use a worksheet, which looks like this, to create the adjusted trial balance. The worksheet, which in the real world is created using a spreadsheet, shows our unadjusted trial balance on the left. The term unadjusted means that not all the accounts are up to date. In other words, it's before we have adjusted our accounts to make them accurate. Why might some accounts have an incorrect balance? Well, for example, notice it's the end of the year, and our unadjusted trial balance says we have $700 of office supplies. So earlier, we purchased office supplies and recorded them in the office supplies account. And we've been using them throughout the year. But when someone goes to the office supply closet and grabs some highlighters, no one runs to the journal to update the account. They could, but that's way too much busy work. So at the end of the accounting period, such as December 31st, we'll calculate how much office supplies have been used. We'll use that amount to lower the office supplies account in the adjustments column. Then we'll place the balance of office supplies on hand in the adjusted trial balance columns. For example, our office supply account says we have $700 of office supplies. But let's say we count them up at the end of the year and we find we only have $100 of office supplies. That's just a random number I chose. It has nothing to do with this homework problem. So if we had 700, but at the end of the year we ended up with only 100, that means we used up $600 of office supplies. So we have to lower the account by $600 in the adjustments column. Then we take $700 of office supplies, subtract the $600 we use, and that results in the updated balance of $100 of office supplies. So this worksheet makes recording the adjusting entries easier than using individual T accounts. Also, later we find out that the worksheet is used to help us prepare our financial statements, like the income statement and balance sheet. So to do the problem, we don't have to have this open because it's showing the first two sets of columns down here. So here's our year-end data we're going to use to do our adjustments. So we go to our office supply closet, and at the end of the year, we find out we have $200 on hand. But according to our records, we have 700. Well, that's no longer accurate. So if we have 200 on hand, we started with 700. How much did we use? 500. So we have to lower this account by the amount used, $500, so that the account is now correct. So how would we lower the office supplies account? Well, the office supplies account is an asset. So to lower it, we have to credit the account. So in the adjustments column, I'm going to put the amount of supplies that we used here to lower the account. So we used $500 of office supplies. So now if my accounting lab let us see and plug in the number over here in the adjusted trial balance, we would say we had 700, we lowered the account by 500, which gives us a new balance of 200. And of course, the normal balance of office supplies is on the debit side. Now, when we're doing these adjustments, we have to pair them up. So this is A. So for adjustment A, we have a $500 credit. That means we now need a $500 debit for another account. So notice this $500 represents office supplies we've used up. So we lowered the office supplies account, but now we need to show that we've used up the $500 of office supplies. So that would be office supplies expense, or this company chose to call it supplies expense. And the reason there's two reasons why I'm putting it as a debit. I already have a credit, so the other account for this adjustment has to be a debit. Also, this is an expense. As we use up the office supplies, is the expense going to increase or decrease? Well, it's going to increase. So that's another reason why we're debiting supplies expense. Adjustment B, depreciation was $1,100. So do you remember the adjustment for depreciation? First of all, we have depreciation expense, which is down here. So we have to record depreciation expense. So let's see, what asset is depreciating? So it's our equipment. So as the equipment is used up, it's depreciating. So it's losing some of its value. So we have to increase the depreciation expense, and expenses increase on the debit side. So I'm going to take this $1,100 and I'm going to put it on the debit side of depreciation expense and put the letter B. So later, if you're trying to figure things out, you'll be able to find its corresponding partner in the adjustments. Now, what is the other account that we use when we're recording depreciation? We have to increase the contra asset called accumulated depreciation. Now, some of you might want to lower the equipment account directly. So if we were allowed to do that, we would just put the $1,100 here. But the reason we're not allowed to do that is because we have to keep this $14,700 original cost in there. So we cannot adjust it downwards. So the way we get around that is we have this contra asset account called accumulated depreciation. Contra asset meaning it's opposite of assets. So since it's opposite of assets, its plus side would be on the right side, the credit side. And accumulated depreciation is accumulating over the years. So it basically only goes up unless you sold the asset. So that is B. So as you can see, we had a previous year where there was already $1,100 of accumulated depreciation. So this is not the first year we've used this equipment. All right, and our last one, we've got accrued interest expense. So remember, accrued means something is accumulated, but is not yet paid. But it has not yet been paid. In this example, it's interest that is accumulated that we owe, but we've not yet paid it. So let's start with interest expense. We have to record that we have $200 of interest expense. So for an expense, is the expense increasing or decreasing? Well, expenses pretty much only go up. So we're going to be increasing our expenses. In the next chapter, you'll find out that expenses do occasionally go down, but that's when we are closing the books. So we're going to debit expenses and interest expense in particular, $200. This is C. Now, remember, the definition of accrued means it's accumulated but has not yet been paid. So we cannot assume that we've paid it. So in other words, we're not going to lower cash. So we owe this interest. So do we have some type of a payable that shows that we owe interest? We've got accounts payable, but more specifically, we have interest payable. So interest payable would be the better one to use. It's more specific. $200. Now you might be saying, well, why am I crediting this? Well, for one, we've already debited the partner account, so this one has to be a credit because debits have to equal credits. But more importantly, interest payable is a liability. So which way is that liability going? Is it going up or going down? We have more liability, so that's why we're crediting liabilities, or specifically interest payable, because the account is going up. So we've recorded all of these adjustments. Now we have to calculate our total debits and then our total credits just to make sure that they equal. So we've got $500 plus $1,100 is $1,600 plus 200 gives us $1,800. And over here, it looks like we've got the same, $1,800. Then we check our answer. We're excellent. Now we are on a adjusted trial balance columns. So what this adjusted trial balance set of columns means is what are our updated balances. So what we're going to do for each account, here's the previous balance, here's our adjustment, if any, and then we have to type in or enter our new balance of the account. So as you remember, adjustments never affect cash. That's why we did not have a debit or credit here. So I'm just going to copy and paste the $400 over. So cash is not affected by our adjusting entries. Moving down, we had $700 of office supplies, and then we credited the account by $500. So remember, when we credit an asset account like office supplies, that's a decrease. So what we're doing is we're taking 700 minus 500 gives us $200 of office supplies. Why am I putting it on the debit side? Well, we had 700 debit, we lowered it by 500, so that means we still have $200 on the debit side. Also, office supplies, an asset, has a normal balance on the debit side. So all of our assets better have the balance on the debit side unless there's unusual circumstances. Next, we've got equipment, $14,700. We did not adjust it, so I'm going to bring that number over. Then we had accumulated depreciation of $1,100. The equipment depreciated $1,100 more. So what's $1,100 plus $1,100? That's $2,200. Now here's where a lot of students, including me when I was a student, a lot of students don't pay attention and they don't put the balance on the correct side. Notice these are credits. So the $2,200 is going to go on the credit side. Then we've got accounts payable, which is a credit. It's not adjusted according to this. So I'm going to put that on the credit side. We had nothing in interest payable, and then we increased it by 200 more. So I'm going to copy that and make sure that it's still on the credit side. So this is a credit, so it's got to go on the credit side. And that makes sense. Interest payable is a liability. Liabilities normally have a balance on the credit side. Remember, normal balance just means the plus side. Then we got notes payable as a credit. We did not adjust it, so I'm going to bring that over as a credit. We got $4,400 capital as a credit. Bring that over because it's not adjusted. We got service revenue of $10,900. It's not adjusted, so bring that over. And then here's where people make a lot of mistakes. Notice this rent expense is a debit. We're used to now putting a whole bunch of credits in, but now all expenses are going to have a normal balance of a debit. So make sure you put this on the correct side, which is the left side. So $4,400, not adjusted, so I'm going to bring that over. We had $500 of office supplies expense. Notice this is a debit, so I'm going to put that on the debit side. We had depreciation expense of $1,100. Bring that over. And the reason I just bring it over because there's nothing previous to it. And then we had interest expense of $200 plus $200 more gives us $400 of interest expense. Now we can add these up. So adding up our debits, we should get $21,700. Adding up our credits, we should also get $21,700. So when you're doing the work, if these debits do not equal credits, the most likely cause is you put one of these accounts on the wrong side. The other second most likely reason that debits do not equal credits is you've done the math wrong. For example, this 700 and the 500, remember the 500 is on the minus side, so we should subtract, but what some students accidentally do is they take the 700 and add the 500. And then we check our answer. Awesome. Now, some of you who are good at attention to detail might look at these numbers down here, and you might say, well, $20,400 plus $1,800 right here does not give me $21,700. Well, here's the reason why. If you're taking the $20,400 and adding $1,800, that means you're assuming that all of these debits and credits are increasing the account. For example, let's look up here. This $500, is it increasing this account? No. This $500 represented how much office supplies we used up. So this $500 is representing a decrease. So that is why you can't take the $20,400 and add $1,800, because not all of these are additions. So we're done with this problem. Now, the other thing to realize is that this worksheet, remember, is just a spreadsheet. It is not an official document. So you will not see this on, you will not see a copy of like Microsoft's worksheet on the internet. Like you could find their balance sheet on the internet, and you could find the income statement on the internet, but that's because those are publicly traded companies, or Microsoft is a publicly traded company, and the income statement and balance sheet are financial statements. So this worksheet is not a financial statement. And also, this is not the official records of the business. This is just to help us create these adjustments. So our next step in the real world would be to take these adjustments and to put them in the journal. Remember, the journal is where we put our transactions first. And then once they're in the journal, then we would post them to the ledger. So don't think that just because we've done the worksheet that this information is officially in our accounting records.